We detected an unusual trade worth $3.5 million on Canadian solar stock, ticker symbol CSIQ. So in this video, we'll analyze this unusual option activity to figure out whether this wealthy investor is bullish and buying, expecting the stock to move higher, or bearish and selling, expecting it to drop lower. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into the unusual option activity to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, there was unusual option activity on October 9th at around 12:10 to 12:11 p.m. A series of trades all targeting the 20 strike calls that expire January 21st, 2028. Since these options expire more than a year from now, they're what's known as LEAP options, which stands for long-term equity anticipation securities. This does not necessarily mean they have to wait more than a year to profit. The fact that this wealthy investor is trading these LEAP options now suggests they believe they're getting a good price at this moment. Hundreds of contracts for these same call options were being traded multiple times, and they were also being traded at the same options price of $3.50 per contract. Keep in mind that options are priced per share, and each options contract controls 100 shares of stock. So to get the actual dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each of these contracts costs $350. And so, to calculate the total cost this wealthy investor spent, we multiply the price per contract by the total number of contracts traded. And so, how many contracts did they trade? Because it's not just these hundreds of contracts that you see here. There's more than meets the eye. That's why we always take a closer look at the data to improve the accuracy of our analysis. So let's check how many open contracts existed before this unusual trade was made. This is the historical data from October 8th, the day before this unusual option activity happened on October 9th. So looking at the January 21st, 2028 options at the 20 strike calls, the open interest was about 500 open contracts. And now that the data has updated, let's examine the option chain for the same January 21st, 2028 options at the 20 strike calls. And we can see that the open interest has now increased to about 10,500 open contracts, up significantly from just 500 contracts before this unusual option activity. This clearly shows strong interest in these options, and it also signals this wealthy investor opened new contracts rather than closed them. Now keep in mind, some of these new contracts could be other traders jumping in, including ourselves and our members. But the majority of these contracts were opened by this wealthy investor, and with this kind of size, they're making a strong directional bet and putting real money on the line. How much? Well, let's do a quick calculation. Since we currently have about 10,500 open contracts, we subtract the 500 contracts previously opened, which equals 10,000 new contracts opened. So to estimate the cost of this unusual trade, we multiply the number of new contracts by $350, the same price we saw on the options time and sales tape. And this equals a total trade size of $3.5 million for this unusual option activity. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the smaller, more selective trades we share on our website. And so, if you want to get access to the lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. And if you join the membership through our website instead of YouTube, you'll also receive additional trade alerts by email because YouTube does not share your email address with us. So if you want more opportunities to profit, make sure to join the membership through our website. Keep in mind that our members also get earlier access to trades like this before anyone else, even before we share with the public. So if you're tired of being late and want more time to act on these opportunities, just head over to our website where you can see exactly which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? With that said, even though this trade carries higher risk, we still took it, but we used position sizing to manage our risk. As you can see here, at the 20 strike calls, since this was a new opening trade, we also bought these call options and got into the same position here, marked as POS, which stands for our position, and the green color indicates a buy position. Because based on our deep research across multiple variables and data sets, this wealthy investor bought these 20 strike calls for $350 each, which is the price we saw earlier on the options time and sales tape. And so when we analyze this trade, you can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line over here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below the zero break-even line as the share price goes down, this trade becomes more negative, more loss. And as the share price goes up, this trade becomes more positive, more profitable. In other words, this trade is going long bullish on Canadian Solar stock. We can also confirm that by checking the options Greeks. This trade has a positive delta, which means it's positioned long and bullish. If it was a short bearish trade, we would see a negative delta instead. But keep in mind the risk with this trade. It has a negative theta, which means it loses value over time due to time decay. And that is why you can see here, the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break even on this trade moves higher as time goes on. And so you can see here, even though the call options we bought have a strike price of $20, the stock needs to trade above $23.50 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. We do not invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here where you can also learn more strategies to boost your profits. Let us know in the comments, do you think Canadian Solar stock will move higher or drop lower? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.